What is going on, everybody? Welcome to the next episode of Beyond Base Camp. We have a very special guest for you today. This is Evelyn Schronce, and this is a first for us. She actually is a team member here at Element. She's our Director of Carrier Engagement. She does an incredible job, so thank you for that. But also, some of our folks are reaching out and saying they love the content so far, but they also would love to hear a little bit more about insurance and some of the practical things they could be doing. So we thought, who best to deliver value but Evelyn? So with over 30 years of experience on the carrier side, she's going to bring a lot to us today. So we hope you enjoy this one, and we look forward to a great conversation. All right, so Evelyn, thank you for joining us, first of all. It's good to have you here. A lot of our clients and listeners and viewers have kind of said that they're really enjoying things so far, but they're like, hey, we know you guys do insurance and benefits and financial services. Like, feel free to have somebody from your company on. And so I was trying to think about who could add the most value, and you came to mind immediately. So, wow. Yeah, appreciate you being willing to do this. But what we want to talk about today on Beyond Base Camp is just, as you know, it's all about what happens. We all have all these plans, but then reality happens, right? So we are having these conversations every day around insurance, and we have a large local real estate investor who, for him, the dynamics of insurance are fundamentally changing his business. And he wants to know, how do I get out ahead of this? What do we have to do? Like, is this the new normal? Like, all these questions that they're asking because, he does property for a living. He builds it, he rents it, and, all these things. And many of our clients are facing that. Commercial auto rates, what's going on there? They want to grow and scale their businesses, but it's coming at a different reality right now than it used to. Things like that. So that's what we're going to be talking about today. So before we dive all into that, just how would you say, so as a little bit of background, we talked about it in the introduction, but with your background on the carrier side prior to joining Element, can you give us a little feedback on just how we got here today? This is a very hard market. People are frustrated. There's challenges with it. And we're walking alongside our clients each and every day, helping them navigate. But how would you say we got here today? Because for a lot of people, it feels like we got here very quickly.
Sure.
Yeah.
The insurance industry as a whole is designed to operate at a break even for the most part. So when you're looking at the amount of money that they take in for premiums, the amount of money they pay out for expenses and losses, they're looking for a break even. And over the last few years, that break even point hasn't been happening. So that combined ratio is what it's referred to in the insurance industry, crept up pretty quickly.
Right.
And some of that's been due to inflation. Some of it has been due to the social influences of inflation. And by that, we've seen some very crazy nuclear verdicts from a liability perspective. In fact, we're marking the 30th anniversary of the McDonald's hot coffee
Oh, that's
spill.
right. I remember that. That's
Yes.
30 years.
So it's, when you start looking at things that impact insurance, those are big drivers, but one of the other big drivers is the reinsurance market. And reinsurance is what insurance carriers buy to protect themselves with large losses or catastrophic losses. And the reinsurance market a few years ago started to recognize the trends that were going on and began to increase reinsurance premiums. At the same time that they're increasing those premiums, they're asking companies to retain more of the risk.
Right.
So we now have a situation where insurance companies that are dealing with our local businesses are being put at pressure where their own insurance rates are doubled or tripled over the last few years. They're absorbing more of the costs, and we're seeing trends with larger losses. And that's really what's driven us to the point we are feeling today.
Right. Because a lot of our clients will say, like, well, I haven't had a loss in 5-10 years, something like that, and yet I'm still getting these increases. Will those things affect, even though they're happening on a broad scale? Is that because of reinsurance? Is it these catastrophic losses? In my mind, to be totally honest with you, right now I'm thinking about property, what's happening in property, and what's happening in commercial auto specifically. Is that the catastrophic losses that are happening across the country, like the things you're going to see on on the news, the national news?
It typically is. You're going to see the huge weather events that are causing these issues. What you don't necessarily see is the smaller costs that are associated that end up building up. And when you look at cars have increased in technology exponentially. They're a lot safer, but they're a lot more expensive to repair.
Right.
So property, what used to be the biggest concern was fire. Now the biggest loss leader in the property segment is water. And so you're starting to see some shifts in where claims are coming in. And regardless of whether you've had a claim or not, overall rate adequacy ends up being increased. And not every customer is feeling it the same way from an insurance rate perspective. What we're seeing is a little bit more differentiation in class of business. Carriers are starting to specialize in certain types of business. They may be getting out of certain lines of business because they found they either don't have the expertise to really do it well, or it's been a loss leader for them. And long term, overall profitability just isn't there. So we're seeing that not every market is feeling the pain that we're seeing mostly on the commercial auto and the property segment. We are seeing it on the umbrella
liability
segments
as well, absolutely.
Carriers that were offering $5 million umbrellas at the drop of a hat are no longer doing that for all classes.
Right.
And that goes back to some of the nuclear verdicts that have come out of cases that we had courts backed up during COVID. Those cases are now being heard. We're seeing larger verdicts, so that is having an impact on the liability portion as well.
Are you seeing any availability, because this creates some sort of, there can be contractual friction here too, because some of our clients have contracts with those that they serve that have larger and larger insurance requirements and a tightening so it's harder and harder for our clients to meet those requirements as the contractual requirements are going up. So what are you seeing carriers do to, I don't know, meet in the middle, help that reality? Because both sides are true. You're saying nuclear verdicts, so someone that I have a contract with wants me to carry a larger limit, and over here I can't go readily get that limit. So what are you seeing? What's something practical that our clients could be doing who are facing some of these just pressure points?
Yeah, I would say the first and most important is reading your contracts and making sure you understand contractually what you're responsible for.
Yes.
Because there are a lot of contracts out there that put all of the financial responsibility in the event of a loss on you. And you may be the small business owner that has just a tiny piece of liability. But when that claim comes in, Walmart or some of these big vendors may be coming to the point and saying, you signed an agreement, you're responsible for these damages. So first and foremost, it's understanding what they are. Typically, if there is a contract need, we can go to our carriers and we can have discussions and show them the contract. And we, in most cases, have been able to get limits that they're looking for, assuming that it's not an uninsurable exposure.
Right.
Which there are some of those out there.
Yeah, absolutely. And I think that's an important part of the risk management process is, avoidance is one of the 5 pillars of risk management. And we have had clients where what they're being asked to do from an insurance standpoint is literally not worth the revenue made from that engagement, right? So they just hey, I don't need to do it, But also, too, I would say, practically speaking, there's a power dynamic in these contractual relationships, right? They're unilaterally written, meaning usually whoever you're trying to do work for has written them. But we've had a lot of success helping clients kind of push back on that a little bit. And then that's where the power dynamic comes into play. How badly do you want that work? And how badly do they want you to do that work? And usually there's a middle ground there. And a lot of times what we're seeing is our clients who are going back with questions about the contract are being viewed very positively. They're like, hey, you're a professional organization. You took the time. You're reading this. You care about this. And yeah, we can. And other times it's a hard line. And then both parties have to make a decision. I really wanted you to do the job, but you don't want to come up on your insurance limits. We can't use you. And vice versa. I really wanted to work for you, but it's not going to work out this time. And so that's some of the deeper work that we get to do on the risk management side. So yeah, just I would encourage everybody who's watching, if you're feeling those pressures, like, it all starts with a conversation with the person you're trying to enter into contract with, a conversation with your insurance, and then hopefully your agent, us or otherwise, is representing you well and advocating on your behalf, to try and just meet the practicality of what's going on in the market. Like, hey, I'm just trying to do work here, like.
And you mentioned avoidance. Subcontracting is an option for a lot of business owners.
Yeah, that's a great point.
If there's a situation where there's a particular type of exposure that your insurance is uncomfortable with, or that you are finding isn't financially beneficial to buy those limits, there's always the option of subcontracting to another professional.
Sure, absolutely. It does feel like it's happened quickly, and I'll echo that, being a professional in the space. Our clients feel that, though, for sure. The last 3 renewal cycles. Why do you think? Is the industry behind? Is it a reflection of just crazy reality over the last 5 years? What's your perspective on that, having worked for a carrier for so long?
Yeah, I think there's a couple things that have driven it. But I will start with, I think the biggest driver is that most carriers that write commercial coverage also write personal lines coverage. And the personal lines market, the homeowners, the auto, has been really stressed to the limit of what's being paid out on claims. So, for instance, last year, the industry puts out a projected loss ratio for both commercial line of business, personal lines, and then combined. So the combined ratio for the industry is expected to come in at 104. The personal lines is coming in at 110. The commercial lines is coming in at 99.7. So if you have a carrier that their mix of business is 50% personal lines and they're losing that much money there, the reality is they're going to be taking rate increases across the board.
Right.
So I think that pressure of overall profitability has impacted commercial lines. I think the other reason that you've seen such quick, what feels like came on quickly, is carriers are starting to segment particular classes of business, and they're really digging into the data and saying, we'll pick a class, HVAC. We're really seeing an uptick on claims related to the professional work of our HVAC contractors. We're going to shy away from HVAC. So now, instead of having 20 markets in the agency that might be targeting that class, maybe we only have 15.
Right.
That puts those 15 in a much better position to be driving rate into the book.
Right, absolutely. Supply and demand at the end of the day.
Absolutely.
And just so you all know, combined ratio, what we're talking about there is, if the combined ratio is a 104, that means it's costing $104 to do $100 worth of business. As any business owner knows, that's not a great way to scale or grow from. But you might also be thinking, how are they still in business and solvent? And that goes to kind of fundamental DNA of insurance, is when premiums are paid, they're also trying to invest that money in the meantime to make some investment gains. So if they, in that analogy or that example, if they were able to make a 10% return on those premium dollars, now to do the 104, they had $110 to do it, so they still have $6 left over, and they were okay. That's the only way insurance companies can operate at a higher than 100% cost of operation. So just some of our clients don't. Sorry, I love this stuff.
Thank you for sharing.
I just want to make sure people know, like, fundamentally, if I heard a business like the coffee shop down the street, it cost them $2 to make coffee that they sold to me for $1, I'd be like, the coffee's great. They're not going to be around very long. So that's going on in the background. So there are a lot of things that feel out of control for our clients at times, and they will feel like they're on this ride, kind of a wave that they didn't want to surf, if you will. It's happening to them, that kind of thing. What are some of the proactive things? What are some of the tools that you're seeing? What are some of the moves that are being made by clients that are having a direct impact on their particular cost of insurance?
Sure. So I think the first and foremost, that the one easy item to control is your own retention in the event of a loss. And so that's typically referred to as a deductible. Many of us know deductibles from health insurance. We know deductibles from other situations, but the deductible on your commercial insurance, 20 years ago, probably the standard deductible was $500. Believe it or not, despite inflation, we still see a lot of policyholders who have never evaluated what that deductible is and the impact that it has on your premium. So the more of a loss that a business owner is willing to absorb in the event that a claim occurs, the less premium they're going to pay up front. So today, I would say the average business owner, if they're carrying a $500 deductible on their loss, it's crazy. You know, $1,000 or $2,500, most business owners are prepared or aren't even going to turn in a claim that's a $500 claim, but they're still paying the premiums for it. So I think that's one of the first biggest things that's within their control. Commercial.
Can I pause you on that?
Absolutely.
And two, a practical thing that you can do is you can dollarize that reality, right? So if you can say, hey, I'm going to go from a $10,000 deductible up to a $25,000, that's almost like, you know, you're taking on some risk retention at that point. You can get a direct differential in premium and say, okay, if I don't have anything happen for 7 years from that point forward, this was a win. Or it might be 3 years, or it might be 6 months, you know, but you can dollarize that reality and kind of give yourself the data points you need to make a good decision on, does it make sense under just a basic risk reward calculation. That's something we do for clients all the time. And there's times where it doesn't make sense. You know, they're at a $10,000 deductible, and to go to 25, you'd have to have 100 years claim free or whatever, you know, but it gives you that information. And that, I feel like, for our clients is that begins a little bit of a feeling of empowerment towards like, okay, I'm taking steps. I'm being proactive in this. So anyway.
Sure. And most entrepreneurs and business owners are risk takers.
They're familiar.
Yeah, they're willing to sit there and measure out, okay, does this make sense? So it's definitely something that they should be considering. I think one of the other things that's really within their control that they don't necessarily realize is the safety programs they're putting in place.
Absolutely.
You know, you talked particularly about commercial auto. And there's been a ton of technological advances going into managing fleets. And when you have, you know, whether you have a fleet of 5 cars or you've got a fleet of 100 vehicles that are out there, there's things like speed governors so that the vehicle can't go over a specific speed. There's plenty of hardware or apps available to be able to monitor the driving habits of the drivers that are using your vehicles.
Right.
And then the basic fundamental, who's driving your cars?
Amen. I was hoping you'd say it. Yeah.
And would you want that person borrowing your car
That's
over
a great way
lunch
to think
to
of
run
it.
to the post office?
That's a really practical way to think of that. Just is this someone you'd toss your keys to on your personal car?
Yeah, because at the end of the day, you're picking up every ounce of liability for them as their employee. So those are things that are within your control. And when carriers are looking at developing premiums, they're taking those things into consideration. And carriers on the commercial line side have an ability. It's not just like a homeowner's where there's a base rate and here's what it is.
Right.
The carriers have the option of putting on individual risk premium modifications, or IRPMs, if you've ever heard that acronym. And what that does is they look at the things that you're doing as a business owner, and they can apply credits to your policy as a result of the things that you're doing.
Right.
So not only doing those things, but keeping your agent informed.
Yes.
If you haven't met with your agent to talk about some of the things you're doing from a safety perspective, have those conversations. And your agent may very well have some suggestions for you of things they've seen other business owners do that have either helped improve insurance premiums or help improve safety and loss mitigation overall, which is important.
Oh, very important. And it's important to communicate that to your agent so that your agent can then therefore advocate. And I know with ours, we always do, you know, a narrative. Why this is a best-in-class risk, assuming it is. We're not going to say it is if it isn't. But that story has to be told. And they want to know what you are doing proactively from a risk mitigation, from a hiring standpoint. The who is so important in all of this, who you have on your team. And, yeah, they absolutely I can send in 2 accounts that on paper are the same. 100 employees, 100 employees. 70 vehicles, 70 vehicles. This, property schedule, same area. The one that has the story and is communicating the proactivity of what they're doing, the business strategy behind it, the how of all of it, and completely different price points. The carrier's price to say, I want this one, you can send that other one somewhere else, or whatever the case may be. So that is critical in taking ownership of this, what can feel like I've what's happening to me, which our clients seem to really appreciate. So what about, are there any just like practical tools, if you're not doing this, then you're missing out?
Yeah, and I think it really depends on the size of your business. And we have business owners that are, that have just started up and may be working on their own or have a couple of employees, to really large organizations. But at the end of the day, if you're talking about property, and we'll start with the property piece, the reality is there's a certain amount of routine maintenance and responsibility that you have as a business owner to protect your property, to protect your employees. Mm-hmm. And those things, they're as simple as water detection devices. Do you have water detection devices in place that are going to let you know when a problem's starting to arise? Yeah. Are you having your roof checked on a regular basis? Are you having your ANSEL systems reviewed if you have cooking exposure? Mm-hmm. Are you having those serviced the way that you should be? If you have sprinklers, are you having someone come out and check the sprinklers to make sure they're in working function, mm-hmm. or that you're not going to have a leak? So all of the routine maintenance that we as individuals think about on our homes, it's doubly important from the commercial perspective, mm-hmm. But also from the workers' comp and safety perspective, and it goes to liability as well. There's a lot of new tools out there that help you protect your employees. Right. So there's a lot of safety programs out there. There's new devices, plenty of new devices out there. That can help you start to measure the exposure that your employees might have. And, you go back to the coal mines and the story of they used to have the canary in the coal mm-hmm. mines. Absolutely. So that they recognized it was the oxygen was bad and they needed to get the miners out. Well, we're hopefully past the point of canaries. But yes, but the point is there are wearable devices today that will determine air quality. It'll mm-hmm. determine heat of the individual that's wearing it. It'll measure movements to determine if there's repetitive motions that may be causing injuries to your employees. Mm-hmm. There's all kinds of new technology out there from a safety perspective for your employees. But as you said, it also goes back to who you're employing. Right. And putting somebody in a position without appropriate training mm-hmm. can be a big area of loss. Right. And that's something to be thinking about. Are you providing the appropriate safety training for your employees? Mm-hmm. Do they know their job? Do they know the best way to do it? Yeah, that's great. I would say anecdotally, too, we have seen a direct correlation in employee turnover to training and safety. Those who take those things very seriously seem to have the same teams, the same drivers when we ask them who to drive, and some who don't seem to not get the benefit of their team knowing how much they're being invested in. Like we have a landscaper who literally started. We have a picture of him and his son. His son's little and he's on the deal with him. And now they're literally up and down the entire East Coast. They do large maintenance facilities, Amazon centers, things like that. Their teams do like yoga together in the morning. I don't know if it's full-on yoga, but like stretching, things like that. But it's all part of the culture that is also part of safety because that's taken very seriously, things like that. And their people would die for them kind of thing. So you get all these extra benefits out of it as well. And then that pricing is also best in class, Absolutely. Everybody wants to work with them, that kind of thing. And you talk about culture and taking it back to the whole McDonald's loss. Mm-hmm. The situation is how do you, as an owner, as a manager, handle the seriousness of safety mechanisms.
Right.
Are you making sure that the safety on machinery, the safety guards are there?
Right.
If they see a manager take it off and they're operating without that safety equipment, or they're not wearing their hard hats, they're not doing the things that they need to be doing, that filters down, and it certainly has an overall impact
Right, for sure.
in how the business operates.
Yeah, that's very good. It just seems like there's a lot of intangible benefits from it too, and we do try and dollarize things whenever possible. Something that I think of for that is video. I have seen video save so many lawsuits. It's not a he said, she said. It is, that's what happened. And also, too, there's clarity because our clients aren't all perfect, too. Like, true accidents happen, and there's something in the clarity of a video that our clients can say, that was on us, and we are sorry that this person lost, part of themselves, So it's clarity on both sides. It's protection, and it helps you care for your teams, But I think it can be difficult to kind of dollarize it's going to cost all this money to get these cameras installed, but we have seen it play out time and time and time again. I could almost say that video, I can't put a dollar on it, but it will pay for itself, So this is what we're dealing with now. Those are some of the kind of the things that are accessible. Video, especially, is super accessible. We have folks that we work with on the training side. We have folks that we work. That's part of our role as an agent, is to kind of quarterback some of these relationships. We can't be all of those things all the time, but to know who in the marketplace can. What are some of the ancillary industries that you're seeing come around the insurance world that are adding value to clients with what they bring to the table?
Yeah, I think that there's, first of all, in insurance companies, it's easy to think insurance companies are the bad guys. But the reality is insurance is as interested in safety as
For sure.
the business owners are.
Yeah.
And so it's not necessarily everything that they're doing is how do I reduce cost, but it's also how do we provide benefit to society. And there are safety grants available from some carriers out there. So if you're looking at making investments in some of these things, there may be some carrier grants available. Again, that's not every carrier, but it's something to be thinking about. In the event of a loss, there's times that they will provide a certain amount of money to make upgrades to prevent that from happening in the future. So we see some insurance carrier support. There's all kinds of insurtech coming around. And the concept of insurtech is they're tech industries that are designed to help improve things in the insurance industry. And you'll see a lot of AI-related things coming in there. I think fleet management is incredibly important.
Right.
You talked about cameras. The reality is people behave differently when they're being watched.
Yep.
Or when they're being monitored. And being able to have some of these wearable devices, the smart hard hats that will pick up exposures that potentially, if they're in a zone that they shouldn't be, they're going to get an alert on in their hard hat that tells them, hey, this is a zone you shouldn't be in. There's a proximity sensor there.
Right.
So there's a lot of ancillary technology that's kind of coming about as a result of what we're seeing. But I think the other thing that we're doing is we're seeing carriers start to specialize a little bit differently, to be able to say, okay, this is a segment of business we know. We're going to provide loss control resources.
Right.
We're going to provide
Absolutely.
all kinds of, even if it's as simple as an HR manual for a business that's just starting up.
Yep.
There's a lot of carriers that are providing those type of loss control services to be able to provide support for the business owners.
Right. Yeah, we're doing that here at Element. We say you can't insure what you don't understand. And so our team is highly specialized, in industries, and someone might say they do a nice job for someone refers them, and they're like, well, hey, thank you so much, but manufacturing is not my specialty. I do service contracting and things like that, so I'll refer you to someone who does that every day because they understand it and can speak to some of these repetitive motion issues and things that might happen in that environment. The other thing, too, I think about that we don't often talk about is benefits. That world is changing a lot as well, where our clients have historically felt like, again, they're on this wave that they have no control over. We are doing a lot of self-funded plans. Like the data is also out there now, so that on a risk, they know what you're doing for fleet management. They know these things, but the benefits of what your team is going through, that's a huge value as well right now. To be able to say, hey, we're going to take that on ourselves. We're going to approach this completely differently. We're going to be proactive. We're going to be engaged. And we've seen that also lead to employee retention as well, where they have actually better benefits at a more controllable cost as well. So I don't know if you speak to that space at all, but are you seeing some of that happen as well?
We really are. I think COVID kind of brought a world where workers were able to have more choice. And when workers have more choice, they start to gravitate towards employers who are being, who care about culture, who are being proactive with safety concerns, who are providing good benefits when it comes to time off, when it comes to things like the cost of health insurance. So all of these things, we've had, you talked about employee turnover. Employee turnover, particularly in the early days of COVID, it was a huge cause of loss with inexperienced people doing jobs that they were never trained to do.
Right.
So I think anything that you're looking at to be a positive employer in the long term ends up giving you qualified employees.
Right.
At the end of the day, benefits you from an insurance perspective. Because again, these are kind of some of the intangibles that the way property and liability insurance from a commercial perspective are calculated, they can provide some wiggle room there. And they really do start to take those things seriously, particularly in high-risk classes.
Right. Yeah, hopefully you find that encouraging. Like it's a snowball effect. It kind of like back to basics, right? You know, if you're trying to do these things proactively to run a better business, they will impact insurance, and we see it in the numbers of premium and of loss over time and everything like that. So hopefully that's encouraging to you. So also too, if we can, just the future of where things are going. Is there a breather coming at some point? Is this the new normal? What should our viewers and clients, non-clients, everybody, what should they be prepared for in the future? Because it's really like that large investor, real estate developer I was telling you about. They're kind of re-looking at the way they run everything and saying, do we need to build a different model? So what's your perspective on where we're going?
Yeah, I think where the industry is going, I think you're going to start to see some leveling out. The biggest issue became we had inflation, we had all these causes that were increasing costs to insurers. Therefore, they had to develop a rate adequacy strategy. And most of these carriers have done this or are in the midst of getting to this point.
Right.
So I think you're going to see some leveling out of rates, particularly tied to the property side of things. But where that's going to level out, it's not going to go back to where it was 2 years ago. And I think that all of us have kind of been through the cycles of insurance. Anybody who's been, owned a business for 10 years or more have seen this happen more than once. I don't think you're going to see rates level down to where they were, but I think you're going to stop seeing some of the dramatic changes.
Right.
We still are seeing some carriers that, as they are evaluating data, which data is huge in the industry right now, you're still going to see some classes of business that are going to continue to harden, that the prices are going to continue to increase. What those are, I don't think we'll really know for another year or two. Property obviously has been one of the biggest impacted habitational risks. By habitational rental properties, those types of risks have seen a lot of premium driven into them.
Right.
I think commercial auto is another area that we've seen a lot of rate driven into as a result of the inflationary impacts. And I think a lot of work has been done in those two areas that we shouldn't expect to see 30 or 40% rate increases. But there are certain classes where the data is just saying the rate adequacy is still 30 or 40% off.
Right.
And carriers are going through that and making tough decisions on which classes they want to stay in. So I think you're still going to see some marginal class-based disruption continue over the next few years, but I don't think you're going to see that general firmness that everybody's continuing to see double-digit rate increases.
Right, yeah. And I think, too, hopefully it's an opportunity for us to, like, prices, in the absence of value, price becomes extremely important. But it's a great chance for us all to stop and think more about the value of what we're getting for what we're spent. Like, we had a client this year, the pricing had, over the last couple of years, had gone literally through the roof, They were in a very tough class code and large property schedule. There were some electrical upgrades that needed to be made, and now the carriers weren't passing on it anymore. It was like, we'll get to it. Now it's like either you do it or we're not. And then the other options for somebody who wasn't going to force it was literally 2/3 more. It was basically 3 times the cost, not 2/3 more, 3 times the cost. So we ran a calculation. We got pricing on these massive electrical upgrades. We ran a calculation. The carrier that should have been on the account plus those electrical upgrades were going to be the same price for the first year as these other lesser coverage options. But then for the future of time, they get the benefit of being in a better position, safer buildings, and they get that savings every year. They're not paying 3 times the cost. So it's a chance to kind of pause and kind of rethink about how you process it too. And we try and do everything we can to empower our clients. And so we wanted to give them, our clients and our listeners who aren't clients, just anybody who is struggling with the reality of their insurance program, just some options to kind of get out ahead of it, that kind of thing. Are there any other risk management strategies you would say got to have on your radar?
I would say, and this really isn't risk management as much as knowing your agent. And I think it's so important, the independent agent, and this is not intended to be self-serving, but the independent agent has a variety of carriers. And every carrier has a different appetite, has a different segment of business that they're targeting, has a different feeling about business. And I think there are carriers that you may be with today who have made a business decision that this particular class of business isn't going to be a long-term business for us. Right. What we're going to do instead of non-renewing all those policies is we're going to just keep driving 20 or 30% rate. The independent agent, the carriers we work with, we have an understanding. They communicate with us on what's going on in their book of business.
Right.
And I think staying close to your agent and knowing what's going on in the marketplace, not that shopping your coverage every year is a great idea, because it's probably not. There's some real value in your carrier getting to know you and you getting to know them. But the reality is if you're insured with a carrier in a class of business that they no longer like, there may be some specialized coverage out there with a carrier that agency represents that's really going aggressive and saying, we like this class of business. We figured out how to make money there. We have certain loss control measures in place that those clients are forced to take a look at and make sure that they're keeping up with. So that would be my last piece of advice, is just making sure you're staying close to your agent, because there's lots of change and fluctuation in the marketplace, and it's going to, I don't see that changing with AI and the availability of information. I think that's only going to be more important.
More and more, yeah. Well, hopefully you all found today's conversation interesting, and I'm hoping it's encouraging too. I hope you got a little bit of practical application out of it, but then encouraging too that, like, if you are leaning into your business and working hard at refining your processes, your team, developing leaders within your company, at the end of the day, so many things still come back to the people. And that's what I love about it. And so hopefully everyone be encouraged, lean into your teams, continue to develop yourself professionally and personally, give that opportunity to your folks, and it will pay off in the insurance space as well. So appreciate everybody. Thanks, Evelyn, for being on today.
Absolutely.
And we'll see you next time.